Hi guys, and welcome back to the channel. Great to have you with us for another live stream. So as I said, trying to do more of those and trying to get more comfortable on live streams. So yeah, thanks for bearing with me. And firstly, congratulations, happy Memorial Day for a lot of the US viewers, which I was quite surprised. It's actually my biggest viewership coming from the US. It seems my German accent isn't that bad. So I wish you a nice day off today. So as the title says, are we seeing some light at the end of the tunnel? Markets are looking a little bit better these days. So let's jump right in and see what is actually happening over here. So obviously today the stock markets is closed. Crypto markets are open as always. That's the beauty of cryptocurrency, open 24/7. But when we look at the last stocks that we can see here on Finwiz, which is actually one of my favorite sort of heat map, where you can see really all stocks in the S&P 500 at a glance. And yeah, you can see over here, mostly in the green. And that's really something we haven't seen for quite a while. And that's definitely reassuring that it's not that bad. Yesterday, we kind of looked at the bear markets, and we've seen that every bear market goes through its up and downs. But good to see that obviously there is some light at the end of the tunnel over here on TradingView, which is another great tool that I use regularly for charting and looking at the graphs. Basically different representation. But you can see here in all sectors, technology, services, electronic technology, health technology, all these different sectors of the S&P 500 are really doing very well. Good to see that. And hopefully that continues. Now, obviously, we must note that looking ahead, the coming week is going to be quite crucial. Obviously today with Memorial Day, the stocks are closed, but I think at the end of the week, we're going to have the jobs coming out of US data. And what is the job market saying? And that's going to have a huge impact on the overall performance of stocks, because if the jobs are coming back stronger than expected, there will be a good sentiment towards the market and show positivity. And that's exactly what we need in such a bear market we're in. So if that is a positive trend that continues, that has been already last month, we should be seeing more signs of recovery, which would be once again encouraging. Now, obviously, some people say there's a recession, some people say it's only going to start. Whatever it's going to be, we will see. But one thing is for sure, we are still going to face a lot of challenges ahead. We still have the ongoing, situation in Ukraine. We have still the aftermath of pandemics. I just spoken to friends in China. They basically still in proper lockdown over there in Shanghai and other big cities. So we're really feeling the full impact, and I think it's going to only come even worse in the coming months. Already people are saying in Europe and other parts of the world that come autumn we will go once again into another lockdown, which touch wood won't happen, but of course nobody knows about this. But one thing that is for sure is that the prices, the inflation is only going to continue to grow, most likely. I don't see any impetus for that to come down anytime soon. And I'm located in Lithuania, where we have actually the highest inflation in Europe at 15%. That's staggering. So hopefully, this will come down. But one thing that it will tell us actually is that people have less savings to invest, and especially invest in stocks or cryptocurrency. Because remember, back in 2021, when everybody was at home, you couldn't really spend your money on anything. You were basically trapped at home. And you got stimulus checks or subsidies, whatever, depending on which country you lived. So you had a lot of excess money that people didn't know what to do with it, and they put it into their investments in stocks or crypto, what have you, meme coins. So that was great for the market, because it was getting more and more money pumped into it. Right now, with things getting more and more expensive, people have less money to spend. So naturally, there's less money that people invest in the stock market, and that's just another factor of why we're seeing a sort of a downturn over there as well. One thing though that is interesting, because as you know, I'm never giving stock picks or anything on this channel. This is purely edutainment, I would say. But if there is somebody interested in any stocks, I really see a strong opportunity in buy now, pay later. I think especially with prices going up, and so there is a strong trend towards that. We've seen this in the recent months and years even. Companies like Affirm, even Klarna from Sweden, they are launching their IPO, most likely end of 22. So there's going to be a huge market. Even Apple Pay is rumored to go into pay now, buy now, pay later. So I think that's going to be a huge factor. When you look at some of those stocks, Affirm, which was one of the biggest in that sector, when you look at the last year, this has been taken an absolute beating. So I think there's so much potential there. Again, I'm not buying it myself, but I'm thinking if right now anybody is interested, that's something to definitely explore further. What else? let's talk about crypto. Now, obviously, crypto has been very much going on a roller coaster, like stocks, like so many other asset classes. One of the biggest things that I see as the threat to cryptocurrency potentially in the future is going to be the crypto regulation. We've seen with Terra Luna taking a nosedive and pretty much disappeared in a matter of days. A lot of regulators are getting behind this and say, listen, we have to regulate this because every financial instrument has been heavily regulated, but crypto, there's billions, even trillions pumped into markets, and there is a lack of regulation. Now, there's two sides to it. On the one hand side, I think it could be very good because having more regulation could potentially lead, to more clarity, and people who were previously scared to finally, do some investments in that direction. On the other hand, though, of course, it could go another direction as well, where in countries like, I believe, India or even China, where they completely crack down on cryptocurrency, and you technically couldn't be using your crypto anymore. Now, a lot of proponents say, well, there is something called DeFi, decentralized finance. So technically, you don't need any intermediaries to govern that, and you can basically permissionless trade. Yes, in theory it sounds great, but just imagine if you want to get your money into some kind of blockchain or cryptocurrency and buy that, and the government blocks all exchanges from accepting the money from a certain nationality, you're going to have an issue. It's not impossible, but it just makes it so much harder and puts a strain on mass adoption, which is obviously we strive towards, because the more people get behind it, it will overall lift up the crypto market. So hopefully it's going to go the right direction. Now Australia, they just elected a new government, so to say, and one of their main first tasks is actually working on crypto regulation. Of course, us in Europe, we are always blessed with really forward-thinking politicians. In the case of the president of the European Central Bank, saying basically that crypto is worthless. It's just mind-boggling. When you have a market cap of 1.2 trillion to call an asset class worthless, well, I would strongly beg to differ. And funnily enough, even her son is investing in crypto. So hopefully we'll be able to prove her wrong. And I think it's really just unstoppable. Yes, it's going through a rough patch like so many other asset classes, but I think long-term it's only going to go one way, and that is up. Let's look at the Fear and Greed Index, which is obviously kind of an indicator of how the overall sentiment towards cryptocurrency is going. Without a doubt, we are still in extreme fear territory because a lot of first-time investors who came on board this 2020, 21, when markets were going up, they put their money, and now it's been slashed by almost half for a lot of the investors. So obviously they're very fearful, which, as we know, is a great time to buy when fear exists. And that's kind of the fear index over time. The higher it goes, the more confidence in the market, the lower the value, the less confidence. And obviously it's been taking a nosedive as well over there. And as I said, that's just a great time to continue dollar cost averaging into the market. Personally, I think it's going to drop even more in the future. So what better time to sort of lower my cost basis? Because I started buying, I think it was almost at 52,000 euros, at pretty much an all-time high. Well, I started earlier, but I ended up at over there. And I thought, oh my God, when it dropped down to 30,000, I thought that's the bottom. I put quite a bit of money in there. And now again, it continued dropping. So I learned my lesson. And now I will just consistently kind of buy my way down. And I wouldn't be surprised if we hit 20,000 euros potentially in the short to mid-term, but long-term, I think we see a different picture. Another potential threat, which was quite an interesting article, I've read about this before, it's quantum computing. So that's obviously the next generation of computers that have like so much more capability of crunching numbers and solving solutions. And one of the things is basically that the risk of quantum computing being able to crack blockchain code, right? The whole point of blockchain is that it is such a complicated code that it can't be cracked, but having quantum computers could risk potentially the security of the blockchain and as such of our cryptocurrencies. So quite an intriguing article. Again, I'm not such an expert on how it works exactly, but overall they say, the faster the computers are being developed to encrypt code. At the same time also there's going to be new encryption. So basically it's gonna kind of continue to grow on both sides of the equation. Nobody knows what it's gonna be. They say it's still gonna take another 20 to 30 years until we have such a quantum computer that is capable of cracking potentially the code. But we do know that technology evolves rather quickly. So it remains to be seen. But yeah, I guess, you know, technology is also something that always keeps on developing. But it's interesting to keep an eye on this going forward. Now then we've seen, again, coming back to the Terra Luna disaster the last couple of days ago, which really I feel sorry for a lot of people, even who watch this channel wrote me that they lost a lot of money. So I really feel sorry. I mean, it was a top 10 crypto coin, and you know, it was hard to imagine that this coin could disappear basically overnight. Now recently, while this legal actions are still going on, there has been a new Luna coin launched over the last few days. And literally shortly after launching, I mean, it once again plummeted to almost zero. So also one point of caution, if you know you don't really understand something, especially in the market like this, just don't invest in it. I mean, I think, you know, cryptocurrency in itself is already really volatile and risky. So I think right now is really not the time to speculate. That maybe works in a market where everything goes up, like we had in 2021. You just put your money in any coin and most likely gonna make money. Right now, I think it's sensible to really look into established coins such as Bitcoin, Ethereum, and just be safe, because we see too many scams happening. And I would strongly recommend you against investing into something you don't really understand. Another great little chart that I've seen from James from Investing Answers, which is a wonderful channel. If you haven't watched it on YouTube yet, really for me an inspiration. I love this gentleman, and he is very smart and gave some good insights. And yeah, really nice overview over here of how he compares the value of Bitcoin to the value of gold. And he kind of sort of mapped it out, the market cap of Bitcoin at the same time compared to the market cap of gold. So currently, let's say we have you know, a market cap of Bitcoin compared to gold, which is around 4%. So that comes to a price of $29,000 you know, dollars as it is at the moment. Now, as we progressively over the years hopefully continue to grow the market cap on both sides, so he's not only growing Bitcoin but also gold. Over time, let's imagine by the year 2030, he projects Bitcoin to hit a market cap of 10 trillion and gold of 26 trillion. So that would be 40% of gold, which, you know, as we said, you know, there's a lot of reasons for Bitcoin to eventually catch gold. So 40% is quite still a bearish approach. And that would bring the price for one Bitcoin to $514,000 per Bitcoin. And that's a bearish case, right? Then in the same year, 2030, if you're a bit more reasonable, which is his assumption, for Bitcoin to reach 60% of gold market cap, you are talking about $785,000. And in a very bullish case, which, you know, might be quite very bullish, if it rivals gold 1-to-1, basically has the same value as the all global gold in circulation for Bitcoin, so 100%, that would mean $1.3 million in price for one Bitcoin. Now, obviously, you know, I think any of those numbers would be amazing, and it just kind of gets me excited to continue dollar cost averaging into it. But of course, you know, only time will tell. Nobody knows the future. Even Lex Friedman, which I really respect, a great podcaster, a research scientist at MIT, so somebody very smart who knows it all. And I love his recent post. He said, I have no idea what I'm doing. And I guess that's so true for so many of us. I mean, it's uncharted territory out there. Every day is a new day. I still think there's a lot of you know, question marks out there, a lot of scenarios that could play out any way. Personally, I think it's gonna go downhill until we rebound eventually. And there might be little good news sprinkled in here and there. So for somebody trading, I think it can be very good times, because if the markets move sideways, up and down, I think it offers a lot of trading potential. But for long-term buy and hold, I'm just going to continue dollar cost averaging. I know it sounds boring. I know I'm repeating myself, but I think that's the right way to do. And especially, as I said, always, if you're into crypto, continue staking and get those daily staking rewards paid to you. And that's just an amazing way. So yeah, guys, that's all short and sweet today. I hope you found it useful. If you did, then please give it a like. Let me know in the comments what you thought about this, or if you have any other points or questions you'd like me to answer. I answer to every single one of your comments. Always appreciate you watching. Thank you so much. Really means the world to me. And yeah,